Our stock's about to crash even lower today. The SPY actually up $2.95. However, if you look at the Dow Jones producing a negative day out here, and the diamonds were down 0.79%. We look at the fear and greed index right now, we're sitting at 20, and we are staying over here in extreme fear territory. However, like a wise man once said, be fearful when others are greedy, be greedy when others are fearful. And let me know in the comment section down below, are you guys ready to buy the dip? Or are you guys loaded up on puts and shorts to the downside? Now, we come over and look at how the indices fared across the board. The Dow was down 82 points. Nasdaq was up 212 points. S&P 500 up 27.23, with the Russell 2000 being up 0.35. Now, we come over and look at how the indices fared across the board. By far, technology was outpacing everything else to the upside, and to the downside, consumer defensives by far outpacing everything else to the downside. And again, the sectors were basically a mix, where roughly half of them were up and roughly half of them were down for the day. So this morning at 8:30 a.m., we had the CPI data come out, and it came out much better than expected. We come over and look at the CPI report right here. You can see month over month, we've been seeing the CPI data either go sideways or start to accelerate on the way up. And then bam, we dropped substantially out here for the month of February. When we scroll on down real quick and we take a look at what was the big takeaways out here in the CPI data, we can see that energy prices were on the move lower. New vehicle sales also were lower. Then transportation services were all positive things out here for the CPI report. And it's no wonder that energy prices were on the move lower, especially if we measure right up here from the swing high down to the low. Crude oil has already dropped roughly 19%, and any bounce on the way back up, we really want to start looking at this high volume area right here on the composite profile at about 70.31. Now, we can also grab a Fibonacci retracement from the leg all the way up here at the top, all the way down to the bottom, and notice that 38% retracement comes right in line where the high volume area is on the profile, along with the bottom of this consolidation area that we have broken down from. Now, if we come over and look at the dollar index real quick, dollar index also today, 4-minute inside day candle, which means tomorrow is likely going to be a breakout or breakdown from this pattern, since the high of today was lower than the high from the prior day. The low today was higher than the low from the prior day. So let me know in the comment section down below, do you guys think the dollar is going to break out to the upside or to the downside tomorrow? However, on a little bit of a sour note out here, if we come over and look at the 10-year yield on the rise once again. And the reason why I say this could be a bummer, keep in mind, Trump wants the 10-year yield lower. That's why Trump wants the stock market lower, so they can refinance the government debt at lower rates. Once the market starts tumbling lower, Jay Powell is going to be forced to essentially cut rates as the economy starts to slow down. But today we got hit with a little bit of surprise when that CPI data came out, big spike on the way up, and then Canada comes out, starts talking about tariff this on the US, yada, yada, yada. Boom, we came crashing down this morning. Then we put a low in somewhere around 11 o'clock. Now, if you guys join me on the live stream today, we had a very good micro futures play on the ES right down here near the lows, where I was able to capture roughly 40 S&P points. If you guys want to make sure you don't miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. And tomorrow we're going to be giving away a 50K take profit trader account. Now, as we come over and look at the Dow Jones real quick, notice the Dow Jones made a new low from the prior day, and the Dow Jones actually closed lower than the low from the prior day. So the Dow Jones, not liking the price action out here, not liking all the rhetoric about tariff this, tariff that, and such. And if we look at the SPY real quick, the SPY was green on the session, where the SPY was up $2.95. You might say, well, Mike, this is a red candle. How in the world could that be green? Well, that's because we opened up with a massive gap. However, we still close well above the close from the prior day. However, with the SPY being up, when we look at the equal weight S&P 500, notice the RSP was down 81 cents or down 0.47%. So a lot of the moves that we saw here in the stocks today were due to the Mag 7 stocks. Nvidia up $6.98. We look at Meta up $13.85. We look at Google today up $3.02. Then we look at Tesla up $17 on this session. However, one of the Mag stocks were not participating in the move, and that was Apple. Apple today making another low, actually closing below the low of the prior day. Now, as we start looking at Apple, you can see Apple's already retraced up almost to the 78.6 Fibonacci retracement level, and then it started to come back lower. Now, if you're trading Apple, you need to be well aware of this pattern, and that would be this A to B, equal C to D pattern, which projects all the way down here towards about 209.15 out here for Apple. Now, once Apple gets down there, I'd expect Apple to either consolidate or a small bounce on the way back up. There is a chance maybe it slices all the way down towards the 127.2 extension. Now, I want to make everybody aware there's only 1 day left to take advantage of Apex's 80% sale off all their valuation accounts, pass in as little as 1 day. And if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. As we come over real quick and look at the QQQs real quick, Qs very strong out here on the session. And one of the areas I want to watch is going to be this 38% Fibonacci retracement on the way back up. If you measure from the swing high all the way down here to the swing low, that's how we get the Fibonacci ratios, and the 38% level comes in about 495.22. MACD indicator on the daily chart still looks horrible at this moment, but at some point, we are going to get a dead cat bounce. At some point, there will be a short squeeze rally. And what I want to see is, do we set up a much larger ABC pattern on the way down? Let's not forget, out here on the Nasdaq, when we look at the weekly chart, we still have this double top pattern that completes right down here at 458.78. As we dive down, start looking at the 4-hour chart, notice what we're starting to see. The MACD indicator is just about to start to cross on the way back up. So we're starting to see the MACD indicator starting to firm up, letting us know that the momentum to the downside is starting to weaken here just a bit. On the 30-minute profiles, you can see the MACD indicator has a bullish cross, but now we're up at the zero line, and this is where this could be dangerous. So if you're a bull in the Nasdaq, pay very close attention. Anytime the MACD indicator gets towards the zero line, and we're basically just consolidating either at lower prices or at higher prices. This case, we had to break lower, and we're just simply consolidating down here at these lower levels. This could be nothing more than a recharge point for another leg lower, or maybe a retest near the lows that we seen on yesterday. Now, as we look at the profile, right now we're at value area low. So tomorrow, if we're trading above value area low, I want to target the point of control. I want to target value area high, and then I want to start looking for this gap resistance, and then potentially a move up towards this first gap up here being filled. When we come over and we look at the futures markets real quick, and we look at the Nasdaq, notice out here on the 4-hour chart, we had a nice little push on the way up. And here's one of the zones that we identified today on the live stream. And that's simply going to be this structure breakdown point. Candle bodies down here to the candle wicks. You can see we broke away from it. We have failed to come back and test it at this moment. So if we do start getting more bullish price action, this is going to be one of the target areas I want to focus on. But right now, we're having a hard time breaking away from this high volume area of the profile. When we start to get that short squeeze rally, this area that we talked about, along with this high volume area right up in here, is going to be a point of interest, anywhere from 20,316 to about 20,554. Now, as we come over and start looking at the daily profiles, one of the areas I do want to focus on maybe for tonight is going to be this minus development area of the profile. That's going to come in somewhere about 19,498.75. Then we look at value area low. That's going to be right here at 19,564 and a quarter. Point of control up here about 19,589 and a quarter, with value area high being up here at 19,723.75. So if you're looking to be bullish out here on the Nasdaq, let's see tonight, can we dip below value area low and then potentially turn on the way back up? Then looking to target for a quick target, that point of control, then all the way up here towards value area high. Anything above and beyond value area high, I want to refer back over here to the 4-hour chart and see if I can push targets up here towards that structure breakdown point, which really comes in somewhere from 20,004 all the way up here to about 20,124. Now, when we come over and start looking at the SPY real quick, MACD on the daily chart looks horrible at this moment. Again, no signs of firming up just yet, but we also want to grab our Fibonacci retracement from swing high all the way down here to the swing low. Some of the key levels I want to focus on is going to be the 38% retracement, 50 and 61.8. However, quite often the first retracement up, we stop, we either reverse a little bit off the 38% retracement, or we start to consolidate around that area. Then when we go ahead and we look left, that also correlates very close to the swing point right over here from January 13th low. So that's going to be an area I want to focus on, about 575.51. We start looking at the 4-hour chart real quick, and we see the MACD indicator flattened out, trying to maybe start to work on trying to get a bullish cross on the way up. Then on the 30-minute chart, look at the MACD indicator, making it close towards the zero line, and we may be getting ready for another leg lower, or at minimum, a retest of these lows. And at some point, Canada keeps threatening the US with more tariffs, I think, to go into effect within the next day or two or something like that. It's only a matter of time before Trump comes out, opens his mouth, and even stokes more fear in this market pushing the S&P substantially lower. Now, speaking of fear real quick, before we talk about the futures markets, let's take a look at the volatility index. Today, the VIX being down 10% on the session, which indicates that tomorrow or Friday is likely going to be an up day out here in the stock market. Now, as we jump over and look at the futures markets for the S&P 500, notice we've had this push down and we have this lower level consolidation. This is troublesome, all right? The longer we consolidate down here at lower prices, the more likely we're going to take another leg lower. However, if we do spike a bit lower, and then we simply start coming back up, I want to look for, at minimum, a retest of the upper part of this consolidation, somewhere in the ballpark of about 56.35. As we come over here and start looking at the daily profiles real quick, there's two different patterns that could be in play on this chart. We can make the case that we have a potential A to B equals C to D pattern on the way down, and that would actually take us below the lows of yesterday, down here about 5507.22. But to play devil's advocate, we also have this potential for an A to B equals C to D pattern on the way up, and we could draw it something like this, which would be right up here near the highs from the CPI data being released. Now, how do we know which of the ABC patterns is likely going to play out? Keep in mind, with the ABC pattern, the pattern is not validated until we either break the swing low or we come back up, breaking this swing high right up in here. So again, it's a kind of a wait and see type of game. If we start to take bullish price targets, looking for the move back up, just note, if we start breaking below this swing point here, that's going to be the area where we know we're wrong in the market. If we come over and start looking at the volume profile levels, value area low will be 5590.75 with the point of control up here at 5605.25 and value area high being up here at 5627.25. So tonight, if we do start breaking below value area low, and then we turn and start coming back up, I want to target the point of control. I want to target value area high. I want to target these candle bodies right out here from when the CPI data report came out, about 56.43, and then see if we can come back and retarget the high from the CPI print. Now, if you guys like to learn which prop firm has the best payout policies, then you want to make sure to check out this next video right here.